Hello, everyone. Thank you for joining us this afternoon for our webinar on U.S. propane and butane winter outlook. It's right at 3:30 Central Time, so we're going to give everybody another couple of minutes to log on before we get started. Thank you. Okay, hello everybody. I hope everyone has gotten online and their system is working appropriately. Welcome to the winter outlook for the U.S. propane and butane market. We appreciate you joining us this afternoon. We're going to be reviewing the state of the market fundamentally for U.S. propane and butane and look at where we are likely to be headed for the upcoming fall and winter season. Before we get started entirely on the content, we have a few housekeeping administrative items. At the end of our presentation, we're going to have a question and answer session and give you all a chance to get some of your questions answered. You should see on your screen this little question box with this green arrow is pointing to. You can go ahead throughout the presentation and fill out any questions you might have, put them in that box and hit submit, and then we will see them and be able to address them at the end of the presentation during the Q&A, if not potentially sooner during it. So we encourage you to go ahead and ask as many questions as possible, and if we don't get a chance to get to them at the end of the presentation, then we can answer them offline as well. All right, so getting started. This is, as many of you know, we are setting lots of new records for propane and butane. That's part of what makes it so interesting to be discussing it here today. We are at record high inventories, about 145 million barrels of normal butane and propane in July, which is just under 30 million more barrels than we had this time last year, and slightly above the high we hit last October. So for production, we're at just over 2.1 million barrels per day. Across the last 3 months, that's up about 160,000 barrels a day versus last year, or 8% growth. That's slightly lower than the growth that we'd seen in prior years. So as a result of the high production and the inventory levels that we're seeing, we are at record low prices, as I'm sure lots of you have heard about and experienced. The crude weakness has certainly helped to contribute to this. Mont Belvieu propane was heard trading as low as the high 20s, and we've heard negative values in Marcellus fairly recently. We've also hit record low levels as a percentage of crude, record low levels versus ethane. So propane is very, very cheap, and so is butane. The question is, how much is that impacting economics for production and as well as economics for consumption? And so we will look at whether those low prices that we are experiencing now are here to stay. Do we need to go even lower, or might there be some opportunity for gains for this coming winter? So that's what we'll be discussing today. This is our agenda. We've already gone through a quick summary of where we are, and we'll be looking next at what's to come. Bob Simmons is our product manager for NGLs and expert at NGL production here at Genscape, and he'll be giving an overview on the outlook for domestic supply at the lower price deck. Joshua Seneschal is from our meteorology team, and he'll be discussing weather conditions, reviewing the potential for crop drying demand as a result of weather during the growing season, and then an outlook for winter as well. My name is Amanda Townsley, and I'll be coming back to you after all this and discussing the demand side of the equation, and finish up by talking about values and discussing the potential for changes in them throughout the winter season. So we're thinking this is going to take us about 25 minutes, and so it should leave plenty of time to answer your questions at the end. So Bob, do you want to get started?
Sure. Thanks, Amanda. So I wanted to talk a little bit about, as Amanda mentioned, producer economics and what that has meant to things such as rig counts and where producers are focusing their efforts and what that has meant to our production forecast. So first of all, as you all are likely aware, weaker commodity prices that we have seen here recently, since October 14, have led to a significant reduction in rig counts. It is also producers have also begun to focus their efforts in the more core areas. That movement of where they're focusing their efforts, along with new gas processing capacity that has been going in, is leading to an increase in NGLs gallons per MCF of natural gas processed. We'll talk a little bit about that later on. However, recent lower liquids prices that we have seen does make the liquids-rich portions of the various shale plays a little less attractive than what they have been. And I wanted to just walk through a couple of examples of that based off the charts there on the right. When you look at Genscape's natural gas break-even values that we show here for the liquids-rich portions of the Utica and the Marcellus, which these shale plays have been a key driver in both gas and NGL production over the last couple of years. The current price deck currently does provide the incentive producers to continue to drill in these core areas of these plays. However, it is right near their break-even values at this point, not providing much more of a return than what they're willing to do before they start to make changes. For comparison purposes, if you look at this first chart on the Utica and Marcellus, it does show in an $80 WT environment that these plays are highly economic with break-even gas values for below $2 for the Marcellus and below $1 for the Utica. However, in a $45 environment, these liquids-rich plays become less economic than the dry gas portions within these plays that are not affected by liquids price, and could start to have producers moving away from the liquids-rich areas into the dry gas areas. In our oil break-even analysis, here we're showing the Niobrara, the Eagle Ford, and the Permian. The Niobrara and the Eagle Ford have the greatest sensitivity here to gas prices, given the gassier nature of these plays. Our calculations for the Eagle Ford show that break-even values are on average around $60. However, the core play itself continues to deliver positive returns on a 10% internal rate of return hurdle. We estimate that given CapEx and the efficiency gains that we have seen in the industry since the first quarter of this year, that the core area of the Eagle Ford, the Eagleville oil play itself, is economic below current prompt prices with a break-even closer to $45. So with that, and with the break-evens where they're at, and with them being in various parts of the plays being better than other parts of the plays, what we have seen is a reduction of rig counts moving away from the less economic plays, portions of the plays moving into the core areas. And this can be seen here with in the chart there on the lower left-hand corner, with a significant rig count decrease that we have seen since the October peak. This has impacted all regions pretty evenly across the board for the lower 48. The exception of that being the Northeast, where we've seen the lowest percentage reduction in total rigs. Rig counts here in July have increased relative to June, and Genscape's forecast has rig counts increasing off the lows in the current environment. However, the recent price weakness that we have seen here has lowered our outlook for active rigs in 2016 from what you see in this chart here. What does this mean for natural gas and our oil production forecast? So given these current economic environment that we're in, we are forecasting that natural gas and oil production both peak this summer. This again is due to producers reducing their drilling programs and deferring well completions as well, and which is leading to lower production forecasted for 2016. However, we do believe that the impact of this in this economic environment is slightly different for gas plant production of natural gas liquids. One of the main drivers of that is that with the drilling being concentrated in the core areas of the plays, what we're seeing is that the gallons of propane and butane per MCF of natural gas being processed has recently been increasing. And you can see that here in the chart right in through here on this lower left-hand corner. So we are forecasting that propane and butane GPM is expected to increase 7% year-on-year in 2015 and another 5% in 2016 across the lower 48. The trend of higher GPM here is leading to a flat to growing gas plant production of propane and butane, while our forecast for natural gas production and gas processing rates are expected to decline. So turning this into a barrel value for you. So based on Genscape's June 2015 forecast, the combined outlook for propane and butane gas plant production is calling for an increase of 79,000 barrels per day this winter versus last winter. These production levels for this winter are expected to remain flat versus our expectations for the remainder of the summer.
All right, so we'll take a look at the summer 2000.
Josh, sorry.
Okay, sorry about that.
Hey, Josh, sorry.
Got a little ahead of
That's
myself.
fine. No, that we got on the wrong slide there for a minute. So when propane and production for this winter is expected to be 57,000 barrels per day, higher than last year, while butane is set to grow 22,000 barrels per day. The charts on this slide show that the forecast for this winter in the current price environment is 100,000 barrels per day lower than what we would have seen in October 2014 price deck. This drops the winter growth rate down to only 5% year-on-year versus the 20% growth rate that we saw in the previous winter. The majority of the growth that we are expecting is going to occur in the Northeast, where we have a significant amount of gas processing capacity set to come online. We're showing 2 BCF per day of gas processing capacity that's been announced to begin operating over the remainder of 2015. Genscape is showing minimal growth for this winter in all other regions, even though the DOE has reported robust growth in Pad 3, this spring, mainly in Texas, our outlook has the growth slowing down in this region during the second half of the year. The majority of the risk to our gas plant production forecasts all point to higher production than what we have forecasted in June. This is mainly related to rig counts actualizing higher than forecasted, which will lead to higher natural gas production than what we have expected, and producers completing more wells than what we've estimated in the core areas of these shelf plays. That's likely to result in higher average initial production of natural gas, which in turn is going to lead to more natural gas liquids. And if new processing capacity fills up faster than expected, either with new production or moving existing production over from older, less efficient plants, that's going to lead to higher production of natural gas liquids versus what we forecasted as well. So in conclusion, the current price environment is pointing to slower propane and butane gas plant production growth for this winter and throughout 2016. However, producer activity in the core acreage of the shale plays and new gas processing capacity is providing upside to our current production forecast for propane and butane. Now I'll turn it over to Josh, who will speak a little bit about Genscape's outlook for growing conditions and this winter's forecast.
All right, so I guess I'll take it from here. And first slide here, we'll start off with kind of a progress report, looking at some of the conditions that we've seen so far this summer. And focusing on the Corn Belt, it's been a pretty cool summer. Our initial summer outlook was definitely warmer, but over the last several weeks, we've really seen kind of an inability for significant heat to build into the Midwest. And as a result, so far, from June through the middle of July, most of the Midwest is averaging at least 2 to 4 degrees below normal in terms of temperature. In terms of precipitation, it's been a little bit more exciting. Back in June, we did see some tremendous rainfall across the Ohio Valley and Illinois. Many of these areas saw 2 to 4 times the normal amount of rainfall for the month of June. And we do have some pretty excessive soil moisture in that area. If you look at the graph on the left-hand side, this looks at surplus soil moisture content. And of course, Illinois, Indiana, and Ohio all have between 50 and 60% surplus soil moisture. And that obviously means that the crop has a lot of moisture and the grain moisture is going to be running pretty high. So we did have a very wet June. So far, it's been a little bit drier so far into July, and temperatures overall have been a little bit cooler than normal. So as we take a look at the month ahead, looking into August, we do think it's going to be a cool month for the western half of the Midwest, a little closer to seasonal for the Ohio Valley region. In terms of rainfall, we think it's going to be mostly seasonal rainfall totals, closer to normal. We do favor heavier rainfall south of the Midwest, mainly localized in the Delta region, and we do see some below normal rainfall across northernmost portions of the Midwest. But in terms of many of the key producing states, Iowa and Illinois, looks like mostly a cool August and mostly seasonal rainfall totals. So despite, we did have early corn planting in May. Despite the fact that we got the crop in early, we've seen a cool summer so far. August does look pretty cool, and overall we think that corn maturity through August is going to progress at a normal to slower than normal pace. So as we head into the fall weather outlook, the two main factors influencing crop dry down, obviously weather variables and plant characteristics. Overall, we do think it's going to be a seasonal to below normal fall. Coolest conditions relative to normal will be across the southern Midwest. In terms of rainfall, close to normal rainfall for the southern half of the Midwest, including the Ohio Valley, and it looks like we'll see below normal rainfall for the northern Midwest. Yep, so as we look at fall weather implications overall, the heaviest rainfall that we've seen this summer has tapered off, and it looks like we'll see mostly seasonal rainfall totals. Sorry, I'm losing my voice. Now, in terms of risks, it looks like September could have the heaviest rain. We think the risk is mainly in the southern Midwest, could keep some gray moisture a little bit on the excessive side. But overall, the heaviest rain has tapered off. I do think that excess gray moisture is going to be a bit of an issue. Again, if you have 6 to 12 inches of rainfall in 1 month, like we saw in Illinois, Indiana, Ohio, we're going to have a lot of excess grain moisture. So overall, we do think dry down needs are going to be pretty high. but overall we do think that temperatures in pretty simple trend closer to normal. So as we head into the winter forecast, overall the main driver here is going to be the El Nino Southern Oscillation. Overall, we expect moderate to strong El Nino conditions are going to continue all the way into the winter. Right now, we do have a borderline strong El Nino, and the vast majority of computer models are indicating we're going to see moderate to strong El Nino conditions persisting the next several months. So unequivocally, it looks like through the fall into the winter, we are going to have a moderate to strong El Nino, and that is going to be the main forecast driver. It looks like all the way into spring of next year. Now, that takes us to kind of our overall look at the winter. Average December, January, and February. Looks like a pretty warm winter, especially for the northern half of the U.S. Our top analog years are 1957 to 58, 87, 88, and 97, 98. These are all moderate to strong El Nino years. And again, overall, it looks like a pretty bearish winter for propane demand, although there are some minor differences in the details, especially later into the winter. It's definitely worth pointing out that 1957 to 58, even though it was an El Nino winter, it did have considerably cooler than normal conditions in the month of February. So while the winter as a whole definitely looks warm, I think there is a risk later in the winter that we could see some pretty cold temperatures, possibly a few cold snaps focused on the eastern half of the United States. So that's kind of our main take on the winter. And again, this should result in below normal propane demand, but we do have to watch out for the latter half of the winter where it could end up a little bit colder.
Okay, thank you, Josh, for reviewing all the weather variables we have ahead of us. I'm going to take a look and try to turn that into what that means in terms of seasonal propane demand for barrels. Josh has given the indication that we may certainly have some positive conditions for crop drying demand this fall, certainly better than minimum levels. Crop drying can be significant. The high end of the range we've seen in the past was in 2009, when the crop was both planted and maturing extremely late, really in the November time period for harvest. That was about 9 million barrels of propane demand. And then in 2013, which we all probably remember fairly well, we did see strong demand as well, about 7 million barrels then. Last year, we actually did have some crop drying demand as well, and in fact, the weather conditions, Josh had said, are actually going to be pretty similar to last year in terms of the harvest. Last year we had about 3 million barrels, so this year could be fairly similar to that, although with a smaller crop. We think so far about 2 million barrels is a reasonable expectation, although along with our ag team here at Genscape, we'll continue to monitor this as the growing season progresses, of course. So moving on to HD demand, which is obviously much larger and more significant than crop drying for propane, although it's certainly much harder to predict. Josh has not given us the most rosy scenario in terms of demand that will alleviate our very, very high inventory levels. For context, the difference between a warm winter versus a cold winter is about 40 million barrels of propane demand, or 20 million on either side of average. Last winter was only slightly colder than normal, for about maybe 5 million barrels of extra demand than an average winter would have. So Josh's preliminary look isn't encouraging. It doesn't look like we're certainly going to get that 20 million barrels of extra demand. We'll continue to use normal weather in our forecast for now until we get a little bit closer to demand season and have a little bit more certainty on weather. So turning to butane, butane seasonal demand is a little bit easier to deal with since we don't have the weather variability, or at least much of a weather variability. Butane demand for gasoline blending is, of course, highly seasonal, generally moving from a low of about 50,000 barrels a day in the peak of summer, like right about now, to 700,000 barrels a day, or a little more than that, even during the peak winter months. So the resurgence in gasoline demand at this lower price deck that we've been at here has gotten a lot of attention. This first graph here shows the EIA prime suppliers demand report, which is up 4% year on year this last winter. We believe the growth potential will continue to provide upside for butane blending in the 2015-16 winter period, although without the price continuing to fall, it's certainly not going to be at quite as robust a level. But the increase in gasoline demand matters somewhat for butane blending because as a result of the increase in demand, we are exporting less gasoline. The U.S. wintertime specs allow us to blend more butane into the gasoline than most of the export markets do. So therefore, when we're consuming it here versus internationally, we can put more butane in. And then additionally, it also matters because when we have more demand here, we're actually producing more gasoline, primarily via importing components and blending them primarily on the East Coast. So that's driving some increased consumption year on year as well. So that increase in gasoline demand as well as production kind of net us last year about 10,000 barrels a day of an additional butane demand overall. For this upcoming year, we're expecting a similar number, although the gasoline demand component itself will probably not be as robust. We continue to see very high refinery operating rates and continued infrastructure projects coming online to allow butane to go into the gasoline stream, particularly in PADD 1. And then, of course, we do even have better incentives year on year than we had last fall, at least based on the forward curve. Okay, I'm going to touch briefly here on petrochemical demand. The theme here has remained pretty consistent. We have very strong demand for LPG for petrochemical use due to favorable economics at the lower crude price. Propane and butane are a lot more competitive to go into the cracker than ethane. This has been the case pretty much since the beginning of the end of 2014, although there have been a little bit of volatility. Butane, we believe, is pretty close to saturating its petrochemical demand potential here in the United States. So for this year, we're expecting it to be pretty similar to last year, about 135 to 140,000 barrels a day of butane demand for cracking during demand season. The propane number is a little bit harder to call, although it certainly looks as though it's advantaged versus ethane. We've seen a hesitancy of the petchem industry to switch to propane right now, primarily due to the weakness in propylene. We have very high inventories of propylene, and demand is fairly weak, and supply is pretty abundant. When you go from cracking propane instead of ethane, you get a 17% propylene yield instead of a yield of under 3%. So they have a lot more propylene to try to find a home for, and that has been preventing some petchems from making the switch. And the second one is just winter. Typically, petchems shy away from using propane during the winter months just because historically there's been price spikes that have ended up kind of burning them on making the switch. So they tend to shy away from it. Taking all that into account, though, we do show demand for propane peaking at around 450,000 barrels a day in the Q3, kind of August-September timeframe, before dropping down to about 400,000 barrels a day for the winter season. So it's probably going to be 60 to 70,000 barrels a day above last winter. So that's still definitely showing some good demand growth for propane coming into next year. On top of that, I should also mention we have the Dow PDH that's coming online this fall and could add another 30 to 35 a day of demand on top of what we're showing here for cracking. Okay, so moving on to exports. So exports are really the 800-pound gorilla when it comes to LPG balances these days. U.S. exports have peaked a little bit earlier this year so far, about 675,000 barrels a day in February, which happened at the same time as the Nederland terminal startup. So since that happened, we've actually seen utilization of the export facilities fall. They had been running really close to 100%, almost nonstop for the last couple years until then. So the original dip you can see in this utilization line on this graph here was operational. We had some weather conditions as well as a spill in the ship channel that slowed things down. But ongoing, we've only seen utilization of about 80 to 85% of that capacity, and that's primarily due to economics as well as scarce freight, which of course go hand in hand. So we just haven't had the incentives or the ability to use all that capacity. So the big change this year in terms of the capacity is the expansion at Enterprise. They are set to bring on 7 million barrels per month of new LPG capacity at the end of this year. We're modeling it as starting up in December, although the exact startup time is still not set in stone. But the other big change that's happening this year that's really important for this discussion is freight. The big jump in export capacity that we saw in early 2015 had not been met by appropriate material expansions in VLGCs hitting the market. And so this was particularly problematic when a large chunk of those exports leaving the Gulf Coast were traveling all the way around Cape Horn to Asia and then back, which takes about 90 days round trip. So the second graph here that has the blue bars shows the new builds for VLGCs and LGCs. It's a cumulative change from the beginning of 2015. So as you can see, we're expecting 35 to 40 boats coming online by the end of this year. There are some new ones hitting the market right now, but the ramp up is mostly in the fourth quarter. And then even later than this, there's another 40 to 50 expected to come online in 2016. So you compare this expansion to getting only about 8 new vessels in 2014. So this change is expected to ease freight and the availability of ships pretty considerably into year end. So to wrap this up, we expect that exports of LPG are going to be increasing for the upcoming season. That's probably somewhat obvious, but we think they're going to increase because they can. The easing of freight shortages plus the seasonally increasing demand internationally will help open up outlets for the exports as well as commitments from the increased capacity that we see here. So year on year, we're expecting propane exports, to total average about 700,000 barrels a day of waterborne during demand season and about 85,000 barrels a day of waterborne butane. So definitely showing some year-on-year growth there as well. So pulling this all together, let's pull it together and talk about what this means for balances overall. Bob has shown that the growth in production is materially slowing as a result of this lower price deck that we're at. And then I've talked a little bit about how this lower price deck is contributing to increases in demand. And capacity expansions, of course, are contributing to this as well. And Josh has provided us with a little bit of context for weather. Hopefully a little bit of demand will come into play in terms of crop drying demand, if not winter weather. So as a result of these changes, we believe that balances will be tightening considerably into winter, with demand growth for both propane and butane outstripping the increases in domestic supplies. For propane, although we certainly have some variability that could come into play from weather. Assuming a normal winter, we believe we'll draw about 20 million barrels more than last year. So that's a very material chunk of the overhang that we have in inventory. This could bring us back to around 33 million barrels by the end of March, which is a very normal in-range level versus history. And we can say something very similar for butane, although certainly not quite as much. Butane will also draw more than last year. We think about 4.5 to 5 million barrels more than last year, which will get us back to around 21 to 22 million barrels by the end of March, which is also above average, but within the historical range. So those are certainly improving conditions than what we've seen in the past, not conditions getting worse, fortunately. So I don't know, does this look bullish, right? It sounds sort of bullish to me. I don't know if at this point average inventory sounds bullish or if it still sounds bearish or if by this time in the presentation it just sounds boring. But it sounds quite bullish to me, and so of course I want to add some caveats about that before we wrap up here. Certainly the lower prices have made their impact, as they should, decreasing supply and increasing demand. We have new capacity to consume things as the calendar progresses, and it always does. We have demand picking up seasonally, and of course that step change between now and a few months from now is a key component to our point of view. Demand increasing domestically and globally will help improve conditions, again, as they typically do this time of year. However, a lot of these improvements that we've discussed in balances hinge on LPG being economic to consume. So that's consuming in the cracker, primarily domestically as well as internationally. So these balances don't represent a large regime change where propane can really run for a long period of time versus everything else. So in summary, we believe that these improving conditions will allow LPGs to price higher versus energy. That's crudes, gasolines, ethane, pretty much anything else that you want to name, as they normally do ahead of demand season. We have already seen this somewhat. We've had the big bounce in propane naphtha and in percentage propane and butane as a percentage of crude. But outside any kind of outlier weather event, for example, we think upside is capped by consumption economics for propane. Okay, so it sounds like I'm at the end of this presentation, but I did want to talk quickly about regional differences within the United States, since we promised you that we would address this. So the bar charts that are sitting on this map here show the regional changes in supply and demand. The orange bar is the demand change year on year for winter, and the blue is the production changes. So you can see clearly, as Bob mentioned, we have a lot of production growth going on in the Northeast for propane and butane. We don't have much production growth happening anywhere else in the country. So we're getting a lot longer in PADD 1. In PADD 2, we, again, don't have the production, but we are expecting lower demand year on year as a result of winter being more normal. So PADD 2 will be getting longer as well. Both of those two regions will help keep barrels into PADD 3, which is something that's going to be required because we're showing tremendous demand growth out of PADD 3, almost 250,000 barrels a day, and that is primarily for exports, but also for cracking. 20,000 barrels a day of butane. So what we think this probably means for regional pricing is that unless we do have some weather show up, we'll not see the Conway-Mont Belvieu spreads quite as tight as last year. Okay, so that finishes up the presentation portion of the evening, or of the afternoon. So we'll go ahead and take a look at some questions. I don't know, Bob, do you see any questions here you want to address?
Yeah, I can go ahead and we can address some questions here. So I think the first question here is for myself here, and this question is, are producers slowing down on completions, or are they actually drilling wells and waiting to complete them sometime in the future? So what we are seeing here is producers are talking about in the Eagle Ford and Permian and in the Bakken, where they are drilling their wells now, and they are expecting to complete those wells at a later date. So that's typically what we're seeing a lot of the producers talk about at this point in time. Another question here is, and this one would be for Amanda, it looks like, does your PADD 1 propane demand include Mariner East 1 and Marcus Hook?
Yes, it does. Actually, if we did not have that exports increasing there for propane, we would have lower year-on-year demand as a result of weather being predicted to be normal or below normal versus the slightly colder we had last year.
Okay, and then one here for Josh. Josh, does your weather forecast, is it based off of a 10-year average HDD or a 30-year average HDD?
Nope. Yeah, can you repeat that one more time for me?
Yeah, Josh, is your weather forecast, is it based off of a 10-year average HDD or a 30-year average HDD?
Okay, yeah, our forecast is based more off of a 30-year average, but it's basically using 1980 to 2010. That's kind of the more recent 30-year average. Yeah, it's more of a 30-year average that we're basing that off of.
Okay. And then another one here for Amanda. Amanda, could you give a brief recap again of your Northeast regional balances more related to butane? Or is that something?
Sure. Yeah, we can go right back to that slide real quick so we can have a quick look at it. So regarding butane, we have production growth actually getting slightly longer year-on-year than demand growth for butane. So as is the case for propane as well, we do expect to see more barrels flowing out of, needing to clear out of PADD 1 into the Gulf Coast even during the seasonal demand period for those potentially. So I'm happy to discuss that in more detail if anyone is interested offline.
Okay, and then Josh, one other question for you here is, what is, with this being the middle of the summer, what is your confidence level in your winter outlook on weather?
Yeah, well, it's definitely a great question. Obviously, we're several months away, and confidence is usually pretty low when you're several months ahead. But we are confident we're going to have an El Nino for the fall and especially the winter. And we typically see a really strong correlation between El Nino conditions and temperatures in the United States. So, being that we're in the summer, compared with a normal winter outlook, I would say confidence is higher than normal just because we see that really strong correlation between El Nino conditions and a warm northern U.S. and a cool southern U.S. So yeah, overall, I would definitely say the confidence is there. However, I just want to make the point, as I mentioned earlier, that the back half of the winter definitely has a little risk. One of our analog years that I mentioned, 57 to 58, was actually had a really cold February. So I do think confidence is above average, but the risk is definitely there later in the winter that we could see a pretty good cold snap across the eastern United States.
Okay, and Amanda, looks like one more here for you. What do you believe is going to happen with the global propane ARBs once we increase capacity and the U.S. A lot of this U.S. propane starts hitting the market in 2016?
Yes, that is the question, isn't it? We've gotten, I see quite a few questions here kind of related to the international market and economics and what's going to happen. Of course, flooding the market with propane there's nothing constructive about that at all. Our ability to export propane is probably greater than what the market wants to consume during 2016. And that's one of the reasons why we say that propane has to remain economically priced on an international level to make some of those barrels go away. We aren't forecasting a massive increase in propane exports for demand season than where we are now, maybe an extra 100,000 barrels a day. We think that that's fairly doable in the winter season, which is really what we are talking about here today, because global demand should be higher for seasonal use during that period of time. We should have the ability to absorb that. Now, when you look further out into the 2016 forward time frame, when we have even more terminals and potential contractual commitments out there, things could continue to deteriorate. But in the short run, so I guess in the long term, I should say, we do expect that the ARB will generally not have positive economics to export on a spot basis in the long term because we do have so much capacity. So we'll be pricing to keep the marginal barrel here. I hope that makes sense. If not, we can discuss further offline.
And then, Amanda, here, another one for you. Given that you expect inventories to revert back to historical averages, how do you reconcile the normal demand patterns for propane versus the fact that you have very large inventories currently? So do you need much larger demand for drawing these down?
Well, you would, except for that we've got the demand is coming from year-on-year changes in exports. So that's really a lot of what's driving the difference. Certainly we had year-on-year growth last year in exports, but we also had massive year-on-year growth in production, and that's kind of what got us into this very high inventory environment that we're in now. Now, what we're expecting for this upcoming season is very little growth in production relative to the export demand growth, and so that's providing a lot of that inventory drawdown.
Okay, we've got time for another question or two here. Amanda, another one here for you is, do you believe that propylene producers have the discipline to crack less propane because of the propylene oversupply, or shouldn't they just go for the highest margin?
Well, I mean, I like that question because that speaks to, I feel as though they should just go for the highest margin. So far, we have seen that not be the case. And I guess it's because it's what you say is the highest margin. Of course, if you make a simple cash cost calculation, the highest margin is going to be to crack propane instead of ethane. But if you think about your operations in a more holistic way, if that puts you into a scenario where you're long propylene and you might be selling it into a very long market, then that might be driving you to make some different decisions that in fact are economic, just not exactly the same economics that we measure.
Okay, and I think
so
we've got
far,
time here
that's been driving it.
Yep. For one last question here, and it's when do you see U.S. rebalancing propane supply and demand? I would say from a supply standpoint, our forecast here is, like I said, is starting to flatten out to lower the growth rate that we've been seeing. However, based off of rigs coming back into the market and what we're seeing from what we're forecasting on the natural gas production side, we start to hit growth rates again that we've seen historically, or somewhat similar to what we've seen historically, kind of going to be later into 2016. So that's when we're probably going to get another help from the supply side of that to kind of help balance the market if we're at this point. And I don't know what you see on the demand side there.
I mean, I'm not sure there's much of anything to speak of on the demand side for propane. The only step changes are related to exports, and in terms of step changes in exports, you're seeing the capacity happening now. So I'm not sure that we see anything else material.
Okay. All right. Well, that concludes our question and answer session and also the webinar for this afternoon. Also, if you take the time to fill out our survey that has popped up on your dashboard, we would greatly appreciate that as well. So I want to thank everyone for attending.